think the first thing to say about Donald Trump is he is unpredictable, if nothing else. However, I think there are a few patterns that we can discern. He's an isolationist. I don't think that's going to change, and I think it makes the world a more dangerous and volatile place. During his first term, we also saw increasing protectionism, and that's something that's escalated under President Joe Biden. Today, we see the Chinese government trying to export their way aggressively out of weakness in their domestic economy. And so I don't think that situation is going to change either. And then finally, I think we know that Donald Trump is going to want a booming domestic economy and domestic stock market. And so he's going to press as hard as he possibly can on the monetary and fiscal levers that he's got available to him in order to achieve that.
I think the first thing to consider is that a Trump term would be erratic. There would be policies that would be seemingly conflicting with each other. And on the geopolitical side of things, we would expect to see strains among alliances and allies. We would expect to see higher tariffs and a break on globalization and free trade. In terms of domestic economic policies, we would expect to see a more business-friendly environment compared to the Biden administration, and we would expect there to be a number of positives impacting the U.S. domestic economy, but there would be a negative offset for trade and external relations.
I think the short answer is yes. Geopolitical uncertainty and volatility leads directly to rising input costs. It leads to increases in things like shipping costs. It leads to companies having to restructure their supply chains, to build redundancy that's expensive, to move from just in time to just in case, for example. Rising tariffs and barriers to trade directly impact prices. And finally, inappropriately loose fiscal and monetary policy, particularly when they act in combination, can be inflationary. And I think that's something we've experienced over the last couple of years.
We see offsetting positives and negatives in terms of the policies that Trump has articulated as he's campaigning for a second term. On the negative side, we would expect to see higher tariffs, which would be inflationary. On the positive side, we would expect to see a much more friendly regulatory environment, a more business-friendly environment, particularly with regard to energy. We would expect to see U.S. domestic energy production increase, and that would have a deflationary effect, which would offset the negatives from higher tariffs. So net, it's probably a neutral.
I think in the short term, the US stock market does quite well as it anticipates the things that Donald Trump will do in order to try to engineer a boom in the domestic economy and indeed the domestic market, because of course that's what winning looks like. And I think international markets might suffer because some of those actions will likely be to the detriment of international companies and international economies. In the long term, I think there's a price to be paid by all markets as a result of increasing geopolitical volatility, tariffs, and inappropriate policy. As we enter a second term, the stock market is already at quite high valuations, and on that basis, I think it's a time to be cautious.
We think that under a second Trump presidency, stock markets will react favorably. There will be a number of different policies. They will be somewhat erratic, somewhat in conflict with each other. But on balance, we expect to see a more business-friendly environment, a more friendly environment from a regulatory point of view. The biggest negative are higher tariffs and strains with allies. These are negatives in general, but but in terms of helping U.S. companies and helping the U.S. economy, we think there will be more positives than negatives, and that should help the stock market.
At Veritas, we like to invest in companies that we think control their own destiny and are resilient to external circumstances like economic cycles or commodity prices. We like to buy businesses that we think can be reliably bigger 3, 5, 10 years from now under most scenarios. We like to buy them when they're on attractive valuations, or what we would call a discount to intrinsic value, and when they have strong balance sheets, which adds a layer of resilience. On that basis, we think the Veritas portfolio is well positioned to perform come what may in November.
We think a second Trump term would be a net positive for the companies in our portfolios. And we could be wrong. And if we are wrong, we think that we're protected. And that gets back to our investment philosophy. We seek to invest in businesses that have stable values, and we try to buy those companies at a significant discount to our estimate of fair value. These two criteria in combination can protect us from times that are tough and can help us prosper when times are good.